Good day, fellow investors. We made this video discussing holding discounts in general. Prosus was also a topic there, and there is always a holding discount to Tencent. And I said, if a comment gets more than 50 likes saying how I should analyze Tencent, where there were many comments and more than 300 likes, so let's do a Tencent analysis. We'll discuss the business, the AI situation, the stock valuation. We'll discuss investing strategy related to Tencent, put it on the quadrant. So if you like this, smash that like button. Let's immediately start with the 2025 first quarter results presentation. If we look at the financials, everything looks good. 4% growth, okay, revenue growth, profit growth higher, net profit growth 11%. Let's go to the annual report and presentation that has a little bit more detail as it is an annual. So they keep on doing what they are doing, their games, their exposure, growth, building the ecosystem around it. Nothing wrong. Over the year, 8% revenue growth, good 40% net profit growth, and they are investing into AI where they plan to scale it onto all their other adjacent businesses, from games, from e-commerce, from finances, from whatever. And you can see here the 10 billion capex going higher in 2025, but still not as high as American counterparts are investing. But okay, Tencent might be more China, only China, compared to the globe for the other players. They are trying to unlock the growth by applying it to all the other things, machine learning, discussions, selling, things like that. And that's the plan with Tencent. It is already a huge ecosystem. So social networks, domestic games, international games, marketing services, fintech and other. And you can see here the revenue growing. So social networks being relatively stable segment in that revenue growth, that growing in line. Domestic games, there were some regulations issues, but still doing okay. International games also growing in line. A little bit more on the marketing services, growth and exposure, and stable fintech business. If I look at the income statement, nothing wrong with the growth there. Earnings, strong profits constantly, extremely high margins, operating margins of 36%. As they scale, they are really pushing on those margins. They have great cash flows. They are, yes, investing in capex, but still very strong cash flows and high cash position remaining. Net debt is also net cash, not net debt. Of that, they are paying some kind of dividend. It's not staggering, but it is something, 20% of earnings per share. And they're also doing some buybacks that have lowered 2% the number of shares outstanding, so that goes into future EPS growth. Let's do now the Tencent stock valuation. So I have put here earnings per share of 23 Hong Kong dollars, and the dividend payout ratio is 20. Thus, the present value of the earnings are their 20% that we calculate. Then I have put a growth rate, which is pretty conservative, of 8% going forward in the future. Discount rate expected return of 10%. Terminal multiple P ratio of 20, that I think it's a little bit lower than now. And all else equal, you get a good return over the next 10 years, but the intrinsic value for a 10% return is a little bit lower than the current stock price. I think that if I change this to 7, I get the stock price. So you can expect a good 7% return from investing in Tencent. In the best case scenario, you can put a 10% growth rate, keep the terminal multiple at 25, which is possible, but we'll discuss that in a moment. And then we are there at the current 10% return, which could perfectly happen as Tencent is a great business with a great ecosystem. Negative scenario, the stock can also go lower in case the market starts thinking that the growth is gone, that there is too much competition, things like that. All in all, the stock price now is 500 something. We are there at 6-7% returns. Tencent ecosystem, China exposure, okay, nothing wrong with the business, has been around for a while, has been growing significantly, has a strong position. Now the regulatory environment in China also looks better. But when it comes to the stock price, you must understand also the sentiment related to China. When the market is very exuberant, the stock will be high. When the market is very pessimistic, the stock will be low. I think now we are somewhere on the trend line, so fairly priced. If AI booms, it will go higher. That might be the time to consider selling. If something else happens, it might go lower. It might be the time to consider buying more. Fairly priced, nothing wrong. You'll likely get a good return. It will depend on the China sentiment. There is something that buybacks help a little bit grow the dividend, but not that significant. And you can see here how negative the situation can get when there is China negative sentiment. That can also be a minus 50%, no problem. But that is the volatility we have to accept when it comes to China. There is always risks for US investors, because if Trump wakes up one day and sees something bad on then he can put sanctions, as he can then remove them. But sanctions, deals, things like that, he can sanction the stock, and then suddenly American investors lose because they find their own stocks sanctioned and untradeable. So that is what's going on. I don't think China will gift him planes or something like that to have better deals, but that is what it is in this current world, and we have to accept it and see where we can find best investing. Economy, China economy is huge. You will always hear in the news there are always issues, which is normal for an economy, especially these huge economies. So regulation, it has subdued, but you never know, might always come back as an issue haunting these big tech AI platforms and ecosystems which those companies are. So let's say fairly priced in this environment. I have put it here. It will likely give a 7% long-term return to investors. So nothing wrong with Tencent, but also not spectacular now. As always, you can start with a 3% portfolio position and then play around those sentiment. Yesterday we discussed oil, and then we already have many of these sensitivity, volatility positions that are good businesses that will likely deliver good returns over the long term, and you can make money on. So always accept the volatility, and that's it. Check my video on my value investing quadrant, where you can find all the links to the stocks we are analyzing and have compared there on the quadrant with Tencent. Thanks for watching. I'll see you in the next video.